Structure tells you the trend, a level tells you where, momentum tells you if there's force, and the candlestick is the trigger that tells you when to actually pull the trigger. But here's the catch most people miss. A candlestick signal only matters at the right place. The same pattern is gold at a key level and pure noise in the middle of a range. Let me show you the few that matter and the one rule that makes them work. You don't need 50 patterns, you need a handful. The hammer, a long lower wick showing price, was pushed down and violently rejected, closing back near the top. The bullish engulfing, a big up candle that completely swallows the prior down candle, a clear shift from sellers to buyers. The shooting star, the bearish mirror, rejection of higher prices. And the doji, a near equal open and close, signaling indecision and a possible turn. Each one tells a story about who won the fight in that single bar. This is the rule that separates traders who use candlesticks well from those who get chopped up. Context beats the pattern every time. A hammer at a major support level after a pullback in an uptrend is a powerful trigger. The exact same hammer in the middle of a choppy range is meaningless. The candle doesn't create the trade, the location does. The candle just times your entry into a trade, the rest of your analysis already set up. Here's how it works in practice. Price pulls back to a support level you marked in advance. You don't buy just because it touched support. Levels break all the time. You wait for the candle. When a hammer or a bullish engulfing prints right at that level, that's price action confirming buyers showed up exactly where you expected. The candle is your green light, the level is your reason, and your stop sits just below both. That combination is a real entry. And the trap, stated plainly, trading candlestick patterns in a vacuum, scanning for every hammer and engulfing across random charts with no level and no trend behind them is a fast way to overtrade and lose. Most candlestick signals fire in places that don't matter. Filter ruthlessly. If there's no key level and no trend supporting it, that pretty candle is just noise. On a real chart, the workflow is mark your levels first, identify the trend, then watch for a reversal candle to appear at one of those levels in the direction of the trend. When a strong engulfing candle forms at support inside an uptrend, you have all the pieces, and the candle simply tells you the moment to act. The level did the heavy lifting. The candle just rang the bell. So, learn a handful of candles, hammer, engulfing, shooting star, doji, and remember that context beats the pattern. A reversal candle at a key level in the direction of the trend is a genuine trigger. The same candle in no man's land is noise. The candle times the trade your stack already justified. Subscribe for the full method and trade your own plan. Education, not financial advice.